Folks, as requested, or maybe not requested, we're talking about Tilray today. Just reported earnings pre-market. A couple things to note. Stock traded pretty choppy in pre-market trading. Started off up, then, once the day started, moved downward. The whole market, though, was shifting upward, helping it big time, and it's made a big recovery up 3% now on the day. I don't think that's necessarily as a result of the earnings report. I think it's more of just following suit with the market as a whole. But let's take a look at these earnings. So, GAAP EPS line of -8 cents misses by 3 cents. Obviously not something that's a shocker. This company wasn't expecting to make profit. So not too bad there. Don't like to see a miss there. And a revenue miss as well. $6 million on a revenue miss. They did show a 43% growth rate year over year, which is pretty nice. You don't like to see a miss, though, obviously, which is why the stock is nowhere near some of the highs it's been to. I mean, you look historically and look, we IPO'd 2018. This is when the memes came true, okay? This stock, at one point, which I don't think it shows there. This was a $300 stock at one point. The charts are a little jacked up. But this stock was a little bit bonkers. And we had another massive bump earlier in the year, and then since then it's fallen down for a lot of reasons, obviously. So, not going to help in this case for sure. The adjusted EBITDA line of $12.7 million in the first quarter is a 58% growth compared to the year prior's quarter. Good to see on that. The 10th quarter of positive adjusted EBITDA. So there's, adjusted profit there. Gross margin remains strong at 43%. Cost saving synergies of $55 million achieved on a run rate basis to date, with actual cash savings close to $20 million. On track for $80 million. That's cool for them. Let's look at the press release, see if we can find anything a little bit finer in terms of details. Obviously, we saw the net revenue increased. Good stuff. Nice. Driven by 38% growth in net cannabis revenue to $70 million. Net beverage alcohol revenue of $15 million following the Sweetwater acquisition in November 2020. Obviously, very small segment for them, as well as Manitoba Harvest here in their wellness segment. Small segments for them. They maintain the number one market share in Canada. That's nice for them, with leading portfolio of comprehensive medical and adult use brands, including top position in the flower and pre-rolls. Good for them, 5 Tilray brands ranking the top 5 amongst adult use product, which is great. And again, this is one complaint I've always had about this sector as a whole, is it's really hard to define a winner here, because there's not much to necessarily differentiate them. It's tough. It's a tough industry and obviously a growing one, but don't know necessarily how to go from there. Net loss of $34.6 million, obviously not looking good compared to a net loss of $21.7 million in the prior year quarter. So they're going in the wrong direction in that aspect, which is not exciting if you're me. I'm a company that likes. I'm a man that likes a nice profit here, and if going in the wrong direction isn't what you look like. It's not what you're looking for on this company. Obviously, they grew from an adjusted standpoint, good for them, but I'd like to see growth on that net loss line. A net income line should be looking a little better. Acquisition of amended convertible notes in MedMen, a premium retailer, good for them. Nothing crazy on these highlights, really, all things considered. Nothing too crazy. Other thing I'd like to look at, the balance sheet on this company. Their formatting is it's a little janky, but that's okay. It's a little janky. We're gonna find it. They're not gonna hide it. Ugh, net loss line, gross. Come on, balance sheet. No, you can't hide from me. You can't hide from me. I think they hid it from me. Oh, look at that. That net loss line just makes me upset. It really does. It really does. I hope you know that. Hey, we found it. We only scrolled through it just a little bit. It's okay. Oh, it was the very first thing. What a shocker. Some people may call me dumb, but I don't like to think of it that way. Okay? The formatting is just terrific. I mean, I don't know what else you want me to say. I don't know who's doing this, but they suck at this. Yeah, it's just not good. Just not well done. So total current assets here, we're comparing 6 months comparison. Not major, but that's okay. Oh, never mind. It's only 3 months comparison. Folks, that's not much of a comparison, but we got it still. Total current assets here, right now sitting at $844 million compared to $883. Slight decrease there, mostly in the cash position, as you can see. Total assets in general at $5.9 compared to $6 billion. So right even, pretty much dead even, dead nut even. Liabilities, obviously something we like to look at. Total current liabilities went up quite a bit, $526 million compared to $401. And total liabilities in general at $1.6 billion compared to $1.5. So, shareholder equity here at 4.3 compared to 4.4. Not terrible. In terms of a balance sheet, it's not terrible. Yeah, I mean, not much else to say really on that one. There's nothing crazy. Long-term debt's not awful on this company. Not necessarily going in the right direction there in equity, but again, it seems like a pretty bad quarter for them, all things considered in terms of profitability. Obviously, they haven't reached profitability yet, but again, that's what I got for you for Tilray. Not a company I'm interested in buying. We're talking about a market cap of $5 billion still. Really 10 times what they're going to do in terms of revenue this year, and obviously no P ratio to be had on this company. Not one I like. It's at lows, so I'll give you credit for that. I mean, we're talking 43% down in the last 6 months, but it's still not one that I'm a buyer of. I don't think this is a beautiful stock right now. I don't think it is. I think you could test the lows in the $5 range, frankly, in the near future, all things considered. So keep that in mind. Just not something I'm interested in buying into, but that's what I got for you. Have a good one.